The government announced 5 major tax updates in 2024. In case you've forgotten them, watch this video till the end because it could change the way you file your taxes in 2025.
First, let's talk about the biggest change, the new tax regime and its revised slabs. The government has introduced significant modifications that could help you save up to 70,500 rupees in a financial year. Under the new tax regime, your income will be taxed in a way that puts more money in your pocket. So if you're earning up to 3 lakh rupees, you won't pay any tax at all. From there, the rates gradually increase, 5% for 3 to 7 lakh rupees, 10% for 7 to 10 lakh rupees, 15% for 10 to 12 lakh rupees, 20% for 12 to 15 lakh rupees, and 30% for income above 15 lakh rupees. Now here's something exciting for salaried individuals. The standard deduction has been increased. If you opt for the new tax regime, you can now claim a standard deduction of 75,000 rupees up from the previous 50,000 rupees. And if you're a family pensioner, your standard deduction has increased from 15,000 rupees to 25,000 rupees. However, if you stick to the old tax regime, these limits remain unchanged at 50,000 rupees for salaried individuals and 15,000 rupees for family pensioners.
Let's move on to some good news for those investing in the national pension system. Under the new tax regime, you can now claim a higher deduction for your employer's NPS contribution. This is up to 14% of your basic salary, increased from the previous 10%.
This deduction comes under Section 80CCD2 of the Income Tax Act. Remember though, if your employer's total contribution to EPF, NPS and superannuation fund exceeds 7.5 lakh rupees in a financial year, the excess amount then becomes taxable. Now let's get into the changes in capital gains taxation. Now the government has simplified the entire structure. Short-term capital gains on equity and equity-oriented mutual funds will now be taxed at 20%, up from 15%. For other assets like houses or gold, short-term gains will be taxed according to your income tax slab. Now the big change is in the long-term capital gains. All assets will now be taxed at a uniform rate of 12.5%. Plus there's good news for equity investors. The tax-free limit for long-term gains from equity and equity-oriented mutual funds has been increased to 1.25 lakh from 1 lakh rupees. Coming to property, if you bought your house before July 23, 2024, you have 2 options for calculating long-term capital gains tax. Either pay 20% with indexation benefits or 12.5% without indexation. However, for houses bought after the 23rd of July 2024, you will have to pay 12.5% without indexation benefits. This choice is only available to resident individuals and HUFs. Non-residents will have to pay 12.5% without indexation. Finally, let's look at the rationalization of TDS rates. Now, the government has streamlined TDS rates for various types of income to make the system simpler. However, these changes don't affect TDS on salary, virtual digital assets, lottery winnings, immovable property transfers, or payments to non-residents. So what does all this mean for you? These changes aim to simplify the tax structure while potentially reducing your tax burden. Now, the key is to understand which regime, old or new, works better for your specific situation. Consider these factors like your income level, investments, and available deductions. Remember, these changes are effective from the current financial year 24-25, so they'll impact your tax filing in July 2025. That's all we had time for today in this video. If there's anything you want us to analyze for you, let us know in the comment section below and stay tuned to NDTV Profit for more.